Alternative Investments Part 1 of 2 Introduction. Alternative investments characteristics relative to traditional investments are illiquidity, high leverage, low return correlation with traditional investments, unique tax and legal consideration, narrow manager specialization, less regulation and less transparency, limited data on risk and return. Categories of alternative investments. Guys, please check that this means that alternative investments are relatively new. And this means that we should invest in traditional investments with alternative investments due to low return correlation. Let's continue now. Categories of alternative investments are 5: hedge funds, private equity funds to make public companies private, and venture capital, real estate investment, commodities, and infrastructure. Returns to alternative investments. Passive managers focus on beta systematic risk because they assume that markets are efficient. That means that everybody will do the same return. Now, active managers assumes market inefficiency exists and can be exploited through strategies like absolute return, concentrated portfolios, and market segmentation. Absolute return is independent from market return. Concentrated portfolio, as simple as this, we focus on few securities, but this has high risk. And market segmentations is moving between segments for high return. Investment structure. We will have an exercise later for this. A fund manager is referred to as a general partner GP, and investors are limited partners. The fund charges management fees and an incentive fees. We always charge the fees on the latest amount reached. To protect clients, hurdle rates, rate before the incentive fee is paid, and high watermarks, highest net value to be passed before the incentive is paid, are part of the fee structure. Let's have practice questions. Fund A charges 2% management fees and an incentive fee of 10%. After a high watermark, the fund value was $1,050,000 at 2020, $1 million at 2021, and became $1,100,000 at 2022. Total fees are management fees, the latest number, 1,100,000 times 2% equals 22,000. Now incentive fees. Here we have a high watermark. The highest amount reached before 1,100,000 is 1,050,000. So we do 1,100,000 minus 1,050,000. The incentive fees are paid only on 50,000. So 50,000 times 10% equals 5,000, and the answer is 27,000. Now in question 2, Fund A charges management fees, all else equal, but we have a hurdle rate of 7% and no high watermark. Hurdle rate means we will have 1,100,000 and minus 1 million times 1.07, the hurdle rate, and the answer is management fees 22,000, incentive fees is 1,100,000 minus the hurdle rate 1 million times 1.07 times 10% equals 30,000 times 10%, and the answer is 25,000. If you found this useful, you can subscribe to our channel and follow up for questions in part 2. Thank you. For any questions, post in comments or by emailing to support@rank1international.com. Have a blessed day.